The last update we did for Forex Trendy was for September, and it wasn't a great month of trading. But if you're expecting month after month after month after month of positive returns, your expectations of trading are highly unrealistic. And I suggest you either temper those to the reality of what trading really is, or just get out of the business. And that brings me to another point. Someone had written in one of my comments that because my videos have affiliate links, that the reviews are worthless. If that's your thought, then you clearly don't understand business in general. Even if you work a normal 9-to-5 job, whether you make money trading, whether you do something else, it doesn't matter. There's something called multiple streams of income. You have to have multiple streams of income. And matter of fact, there's a book by Robert G. Allen called Multiple Streams of Income, How to Generate a Lifetime of Unlimited Wealth. If you don't have multiple streams of income, I don't care what it is. It could be anything. You know, some people do that it works stuff, which it doesn't work, but people buy into it and people make money on it. And that's the same thing with trading. You know, trading is, unless you've got a huge account, like a massive account, the whole point of trading is to build wealth. And you don't just build wealth in one direction. People that trade, they also have money elsewhere. They also have money in other investments. Maybe they buy properties. They have other businesses as well. Some people sell courses. Some people sell live training. It's multiple streams of income. People that have multiple streams of income actually get it. So that person that wrote the reviews are worthless because I have affiliate links is clueless as to how this world really works. That's enough of that rant. Let's cover the month of October for Forex Trendy and just see if, you know, we did better than we did September. So we have to find October. This is not October. That's September 1st. We're going to skip the whole weeklies because we're going to do November later. Here we go. We got a daily chart, US dollar against the Swissy, a flag buy signal on the 3rd of October. Let's see how that turned out. And again, okay, this is good. This is good news, right? Our first trade we look at, we've got an upside break, and our targets are down here. We got as high as, well, we went right to the highs. Actually made a new high. That's pretty good. New highs, 10094. Okay, so we beat target 1. Okay, so this is a winning trade. And again, you want to make sure that you have a way of monitoring how you trade these, how you adjust your stops. As you can see, the stops aren't included in here. You can use ATR stops. If you're playing these breakouts, don't put your stop just in here. You know, a lot of people say, well, if the pattern fails, the breakouts failed. No, a pullback into this range, for example, that's valid. That can happen, right? And if you think of the reality of why that can happen, not so much for spot Forex people because they're generally playing retail, but if you look at futures, for example, if this breaks out to the upside, even though you don't have a US dollar Swiss futures, you have the US futures. Let's just say it's the US futures. Let's say it's the pound futures or the Swiss futures or whatever, you know. Let's say it's Euro futures. Someone has to sell to you so you can buy up here, right? So if it gets pulled back, you know, this is just another area for traders to do something else. So these are not good stop loss positions just below here. It does not invalidate the break. You've seen many breakouts where price will break out, it'll pull back right inside and then take off. The breakout's valid. So you want to find a different way of doing it, and using market volatility through ATRs is not a bad way of doing that. So to keep this pretty objective, we're going to take our breakout price of 94.85. We'll go to the high, and we'll calculate those pips. So it's maximum pips you would have made on this trade. It's 246 pips. Okay, and I'm doing that because all of you are going to have a different way of managing these trades. Okay, that's what. Let's keep going. U.S. dollar against the Canadian dollar, falling wedge buy signal on the 26th of October. Let's see what happened here. This one's just kind of going, bopping around here. So let's just go from 31.16 up into 31.69 roughly. So you had about 53 pips of wiggle room Your trade went back under the entry, and now it's rallying back up. So right now you're probably around break even on that trade. Again, if you see here, price ticked down into the below the breakout, and now it's rallying. We don't know what's going to happen at highs here. We'll see what happens. And remember, right now we're going through the U.S. midterm elections, so anything can happen. We've got another trade that kind of just broke down at 112.45 on the 26th. So these are recent trades. Now remember, we're getting into the election this week. So, don't panic on these things. If I was trading this one, my stop would be in here now, simply because it broke back up inside. Strong reversal here, but price is just meandering here. So I would probably lock in, well, not lock in because it's still underwater, but I would definitely take a lot of risk out of this trade. So it goes from 112.45 down to 110.60. So you had about 82 pips of wiggle room here. And if you're trading this and you're in this and you see the strong rejection, that's the time that you'd be thinking, okay, you know what, this trade's not working out like I wanted to. And you might have just said, you know what, I'm going to put my stop above, and this stop would have ended up break even. Just when you see a breakout and strong rejection, we don't want to see that. We don't mind this. We had strong push down against us. What's going to matter here is this rally that's happening right now in the US dollar CAD on this chart here. It's weak, right? If we don't get momentum to the upside and we get another strong down move, that's when you'd want to be exiting your trade. So that's just how you manage trades. US dollar, here we go. We got 8.358, and it was a breakout buy signal. Here we went as high as 8.4521. So you're looking at 93 pips, roughly, that you have a chance to take some action with. All right, what I mean by that is, like I said earlier, that I don't know how you are all managing your trades here. So I can just give you the potential pips. Obviously, you're not going to get, the peak. Well, you might. It's happened before. Especially if you're looking at this high here, for example, because it basically came right to it. So I try to keep it objective. This is here we go again, a triangle. We got a break, broke back inside, and again, strong push. We don't like those. But let's see what happens with this rally. And you're looking at about 84 pips that you could take action with. Okay, silver. Haven't had one of these for a while. It was a sell signal, and wow, it broke and slammed back inside. Now this is on the 4-hour chart. So trading a 4-hour chart, you're probably not looking for longer term swing trades. You're probably looking for one clean move. And I would think that as soon as you saw price come down into this zone here and just bounce right off, it's actually a V-shaped reversal. You want to watch those. You probably would have done something here, I would hope anyways. So anyways, it was a break at 14.42, which is up in here. And it dropped down for about 20 cents, so not bad. And, a strong rally right back into here. So that's something you'd want to be like, okay, that's enough. So we're going to have to wait and see if we get another setup here. But again, it's actually a pretty decent lesson here. If you look at a range and then the breakout from that range, and I can't measure with this screen drawing tool very well, but if you have this box here and then breaks down, let me see if I can I like the measured moves. So if you take this little chunk here into this congestion and down into here, you can see that it's relatively close, and they're called A to B to C to D moves. Something you want to watch out. So that was silver, and our last one is the Aussie here. So this is a triangle buy signal at 71.16. We've got a breakout here, and if you missed the first breakout, you had a test here. It's actually a picture perfect test. Doesn't always have to happen like that, and we got a nice rally to 72.66. So this actually did really well. Almost got to the second target. Excuse me, it almost got to the fourth target. And this is a 156 pip move here. So you can see that we bounced back from September. Okay, so again, you know, Forex Trendy has continued to be probably one of my favorite products I've ever reviewed. I just think it's a pretty decent product. And I know some people have complained about alerts not coming timely enough. And to be honest with you, I haven't really seen that issue, and I've set up the alerts just to test that. I haven't had a problem with that. You can always set price alerts through something like TradingView, for example. So if you know that we've got this line here, right, you could actually put the price line here, okay, the line, and put that into TradingView and set up that alert as well if you want to have, you know, redundancy in your alerts. Sorry, I lost my mind there for a second. Anyways, click sign up. Again, it continues to be one of the better products I've ever seen. Thanks.